Is your home's value at risk? How anticipatory selling shields Canadian homeowners. Anticipatory selling is a phenomenon that is gaining traction in the Canadian housing market, spurred by a combination of factors that have set the stage for potential upheaval. The landscape of real estate is evolving due to higher interest rates, inflation concerns, and regulatory changes. Recent news articles shed light on these dynamics, showcasing why more homeowners are considering selling before their property values potentially decline. Higher interest rates for longer. Recent news articles have highlighted the concept of higher interest rates for longer as a pivotal factor impacting the Canadian housing market. The Bank of Canada has not only raised interest rates, but it has often hinted at the fact that it believes that interest rates will have to stay elevated for some time. This has sent ripples throughout the real estate sector. As interest rates inch upwards, potential homebuyers face increased borrowing costs, which might deter them from entering the market. Homeowners with variable rate mortgages are particularly vulnerable, as increases in interest rates directly increase their monthly mortgage payments. And, although most are able to cope with a short period of increased payments, if interest rates and monthly payments stay high for an extended period of time, many of these variable rate mortgage homeowners won't be able to sustain these higher payments. This will cause increased mortgage defaults or forced selling. Inflationary pressures and the base effect. The rise in inflation numbers, driven by the base effect from the second half of 2022 to the second half of 2023, has added another layer of complexity to the housing market. Recent news articles have reported on the Bank of Canada's contemplation of raising interest rates to counteract inflation. The base effect, which refers to the distortion in year-on-year inflation comparisons due to lower inflation numbers in the previous year, will contribute to a surge in inflation numbers in the coming months. As a result, the Bank of Canada might resort to tightening monetary policy by increasing interest rates, a move that could put additional pressure on prospective homebuyers and mortgage holders. Real-life example. Barrie homeowners mortgage nightmare. A striking example of the impact of variable rate mortgages can be seen in the story of a homeowner in Barrie, Ontario. Recent news articles have chronicled her journey from manageable mortgage payments of $2,850 per month to the staggering sum of $6,200 per month. This dramatic escalation was due to the fluctuating nature of her variable rate mortgage, a predicament shared by many Canadians. Such cases have prompted homeowners to reevaluate their financial stability and consider selling their properties before their financial situations worsen. OSFI's regulatory changes. The Office of the Superintendent of Financial Institutions, OSFI, has introduced new regulations that further underscore the uncertainty in the housing market. Recent news articles have reported on OSFI's measures to curtail the ease with which banks can extend amortization periods for variable rate mortgages to excessive lengths such as 50, 60, 70, or even 90 years. This move is aimed at preventing homeowners from overleveraging themselves and exacerbating the risk of default. As a result, homeowners who were banking on extended amortization periods to ease their financial burden might be forced to reassess their options, potentially leading to more properties hitting the market. Anticipatory selling. The logic behind it. In light of these factors, anticipatory selling is gaining ground as a prudent strategy among Canadian homeowners. The fear of rising interest rates and the resultant higher mortgage payments is compelling individuals to consider selling their properties before the market potentially cools. The prospect of diminishing affordability, driven by a combination of inflation and tightening regulations, is pushing homeowners to take preemptive measures to secure their financial futures. Potential consequences. The culmination of these factors creates a worrisome scenario that could lead to a decline in house prices across Canada. As more homeowners opt for anticipatory selling, the increased supply of properties in the market could outpace demand, putting downward pressure on prices. Additionally, the reduced purchasing power of potential buyers due to higher interest rates could further dampen demand. The combined effect of these dynamics could result in a correction in the housing market, impacting property values. Finally, The concept of anticipatory selling has gained prominence in the Canadian housing market due to the convergence of various factors such as higher interest rates, inflationary pressures, regulatory changes, and individual homeowners' financial struggles. Recent news articles and real-life examples have shed light on the compelling reasons behind this trend. While the exact trajectory of the housing market remains uncertain, the interplay of these elements suggests that property values might face downward pressure. As homeowners make strategic decisions to safeguard their financial stability, the Canadian housing market is poised for a period of transformation and potential challenges. The strategy of anticipatory selling is starting to emerge in the Canadian housing market, driven by a complex interplay of economic factors and uncertainties. Homeowners, especially those that are becoming financially stressed due to their mortgage payment increases, are increasingly considering the strategy of selling their properties ahead of potential market declines to secure their financial futures. Recent news articles shed light on specific circumstances that underline why this trend is gaining momentum. In what follows, we'll reference some of these news articles which provide some valuable insights as to why this strategy of anticipatory selling is being accepted and applied by more and more homeowners. Canada's real estate correction is far from over. Oxford Economics, BetterDwelling.com, August 4, 2023. According to an article published on Better Dwelling on August 4, 2023, Oxford Economics, a prominent macroeconomics firm, predicts that Canada's ongoing real estate correction is far from over. Despite a temporary interruption, the correction, which saw a brief pause after the central bank's intervention, is expected to continue and last well into the next year. According to Tony Stillo, Director of Canada Economics at Oxford Economics, the firm's latest forecast indicates that the correction is only halfway through its course, with another 10% drop in home prices projected by the first half of 2024. The article highlights that the earlier rapid rebound in Canadian home prices might not repeat this time. Traditional real estate corrections often coincide with rising unemployment and decreased consumer demand, which wasn't the case in the first half of this correction. However, sentiment shifted, causing a renewed decline in prices. Stillo's forecast goes beyond sentiment, suggesting that the upcoming phase of the correction will be driven by multiple factors, including the onset of a recession, higher mortgage rates, stricter credit conditions, soaring unaffordability, and the effects of government policies aimed at curbing speculation and foreign buyers. Canadian mortgage rates, which have been historically low, are expected to rise further. Oxford Economics anticipates that the latest Bank of Canada rate hike will contribute to pushing mortgage rates up to 6.1% by the second half of 2023, adding additional pressure to the housing market. This increase in costs has already led to a decline in real estate investment, with residential investment experiencing a 3.9% quarterly decrease in the first quarter of 2023. The trend is likely to continue into the following year as financing costs rise and returns diminish. Stillo's previous warnings about correction mitigation echo in the article, indicating that while attempts to mitigate the correction's impact might provide short-term relief, they often come at the cost of larger corrections in the future. The analogy of using a payday loan to make minimum credit card payments illustrates the situation. A temporary solution that leads to more significant long-term problems. The article suggests that Canada might be at a point where further attempts to mitigate the correction could potentially result in a financial crisis. Barrie-area woman watches mortgage payments go from $2,850 per month to the staggering sum of $6,200 per month. Forced to sell, Barrie Advance, August 3, 2023. In an article published on August 3, 2023, by the Barrie Advance, Cora Cook, a resident of Barrie-area, is compelled to put her dream home up for sale due to a significant increase in her variable rate mortgage payments. Cook and her family moved into their Springwater home in January 2022. But their mortgage payments surged from $2,850 per month to the staggering sum of $6,200 per month, pressuring them to sell. The Bank of Canada's recent hike in the overnight lending rate to 5% from 0.25% over a year and a half ago has left Canadian mortgage holders, including those in Barrie and Simcoe County, facing financial difficulties. Cook's story highlights the challenges faced by variable rate mortgage holders, leading to difficult decisions such as selling their homes. OSFI preparing stricter capital requirements for some negative amortization mortgages. Financial Post, July 11, 2023. Published on July 11, 2023. In the Financial Post, the article reports that the Office of the Superintendent of Financial Institutions, OSFI, Canada's federal banking regulator, is planning to impose stricter capital requirements on certain mortgages with negative amortization features. The move is prompted by rising interest rates and the popularity of variable-rate fixed-payment mortgages, which have led to an increasing number of mortgage holders facing negative amortization, where loan balances grow over time. To address the risks associated with these mortgages, OSFI intends to require banks to hold more capital for loans where the loan-to-value ratio is above 65%. This ratio compares the outstanding loan balance to 65% or more of the property's value. OSFI stated that this change aims to help banks and mortgage insurers manage risks related to negative amortization mortgages, where payments do not cover the interest portion. The proposed modification would categorize negative amortization mortgages exceeding the specified loan-to-value calculation as exposures that do not meet OSFI's expectations outlined in the guidelines which oversee mortgage underwriting practices and procedures. The regulator emphasized that this alteration will not impact current monthly payments for consumers with existing mortgages. The article also recalls that around 50% of borrowers with variable-rate fixed-payment mortgages reached a trigger rate in November 2022, where their set monthly payments covered only the interest, not the principal, due to increased overnight interest rates. The Bank of Canada had noted this phenomenon and continued to raise interest rates, with the most recent 25 basis point hike announced on July 12, 2023, setting the rate at 5%. OSFI's focus on stricter capital requirements for these mortgages reflects concerns about potential risks for both lenders and borrowers in a rising interest rate environment. The changes proposed by OSFI are open to industry feedback until September 1, 2023. Toronto home prices fall for second straight month in July. Reuters News, August 3, 2023. Published on August 3, 2023. By Reuters. The article reveals that home prices in the Greater Toronto Area, GTA, experienced a second consecutive monthly decline in July, alongside a nearly 30% drop in home sales. The decrease in prices and sales is attributed to the Bank of Canada's ongoing series of interest rate hikes. According to Toronto Regional Real Estate Board, TRREB, data, the average price of a home in the GTA fell by 5.4% in July compared to June, reaching $1,118,374. Concurrently, the number of home sales decreased by 29.7%. TRREB's president, Paul Barron, noted that the sales momentum seen earlier in the spring had stalled due to the Bank of Canada's resumption of rate tightening activities in June. The Bank of Canada had increased its benchmark interest rate in June and once again the following month, setting it at a 22-year high of 5%. These actions were aimed at tempering the economy to control inflation. Financial markets indicate a likelihood of around 75% that the central bank will continue to tighten its monetary policy further in the remaining part of the year. Although the spring brought some increases in home prices, the average home price still remains down by 16.2% from its peak in February 2022. What do you think? Should homeowners adapt this strategy of anticipatory selling in order to protect their home equity? Or will interest rates start to drop soon and prices again climb? Please join in on the conversation by leaving a comment. If you found this video and information useful, please smash the subscribe button and hit the notification bell so we can keep providing you with timely information you can apply on a daily basis.